Here's a number that could reshape New York's future. 10.3%. That's how much the city's 5 pension funds returned last fiscal year, smashing their 7% financial benchmark and creating $2.18 billion in savings that will ripple through schools, housing. Instead, the fund's 3-year average of 9.4% and 7-year 7.8% performance prove resilience is possible when strategy meets stability. The secret sauce: diversification and discipline. The fund's success hinges on a carefully balanced portfolio. Nearly half, 43.4%, is invested in public equities, while 31.5% targets government and corporate bonds for steady income. The remaining 25.2% spans private markets like real estate, infrastructure, and private equity, choices that buffered volatility. For example, infrastructure investments delivered an 11.9% return, outpacing even the so-called Magnificent Seven tech giants that fueled much of the market's optimism. This isn't luck, it's a calculated long-term strategy, said Comptroller Lander. By integrating responsible investing principles to assess risks and opportunities, we're not just growing funds, we're future-proofing them. A controversial counterpoint: responsible investing under fire. While officials celebrate, critics argue ESG, environmental, social, governance strategies might limit profits by avoiding controversial sectors. But Lander's team insists these practices are financial safeguards. Initiatives like a 2040 net zero emissions roadmap and housing-focused real estate standards aim to reduce long-term risks while boosting property values and tenant stability. Responsible investing isn't a moral stance, it's a risk mitigation tool, argues Chief Investment Officer Stephen Meyer. We're seeing tangible results. And here's another twist: the funds are betting big on diversity. Investments with minority and women-owned asset managers now total $23.1 billion, up 37.5% since Lander took office. This isn't just about fairness. It's about tapping into fresh perspectives that drive innovation and returns. What's next? Navigating a shifting landscape. The coming months will test this strategy as markets grapple with rate cuts, trade wars, and climate disruptions. But the pension teams are prepared, focusing on disciplined manager selection and adaptive portfolio construction. As District Council 37's Henry Garrido notes, these returns protect the livelihoods of hundreds of thousands of public servants. We're committed to keeping that promise. So what do you think? Is responsible investing the key to sustainable wealth, or does it sacrifice growth for ideology? Drop your thoughts in the comments. We want to hear your take on this high-stakes financial debate.